dive into the recent dramatic collapse of Connexa Sports Technologies Inc., also known as YYAI. In just 2 days, the stock plummeted from $2.73 to 0.193, marking a staggering 93% loss. This isn't just a typical dip. This is a full-blown crash that sent shockwaves through the market. Investors and traders alike are scrambling to make sense of what happened, as the technical signals are overwhelmingly negative. In this video, we'll break down the key factors behind this collapse, analyze the technical indicators, and discuss what might come next for YYAI. Latest signal for YYAI is a strong and clear sell with extremely high confidence. Technical indicators across the board are pointing to continued bearish momentum in the short term. This means that, for now, the outlook remains negative, and there's little evidence of a turnaround. The market sentiment is dominated by fear, and the overwhelming advice from technical analysts is to stay cautious. Let's look closer at the price and volume dynamics that have contributed to this bearish assessment. Over the past 3 months, YYAI has experienced wild price swings, trading between 0.175 and 5.2884. The most catastrophic movement happened on October 7-8, when the stock collapsed from $2.73 to 0.193. This wasn't just a price drop. It was accompanied by an extraordinary trading volume of 1.09 billion shares in a single day, signaling panic selling. Since the October 6 high of $2.95, the stock has been in a clear and relentless downtrend. Technical trend indicators are not offering any relief. All major simple and exponential moving averages, SMAs and EMAs, are positioned well above the current price, confirming a strong bearish alignment. The stock is trading far below its 5-day and 10-day SMAs, which are at $1.50 and $1.82 respectively. This gap highlights just how far the price has fallen and underscores the strength of the current downtrend. MACD indicator is deep in negative territory at -0.4132, with a histogram of -0.1493. This signals that bearish momentum is not only present but actually strengthening. The ADX, which measures trend strength, sits at 28.7, indicating a developing trend. Meanwhile, the ARUN down at 96 and ARUN up at 92 suggest a potential trend change could be on the horizon, but for now, the bears are firmly in control. Oscillator indicators are flashing extreme oversold signals. The RSI is at 29.03, well below the typical oversold threshold. The stochastic oscillator and Williams percent are both confirm this, with readings deep in oversold territory. The money flow index MFI at 2.52 is another sign of panic selling. These conditions suggest that while the stock is extremely weak, a short-term bounce, sometimes called a dead cat bounce, could occur. Bollinger Bands are showing extreme expansion, with the current price trading well below the lower band. The upper band is at $3.26, the middle at $2.01, and the lower at 76 cents. This setup indicates that the stock is in an extremely oversold state. The average true range ATR of 0.5871 points to high volatility, while the parabolic SAR at $2.95 remains far above the current price, reinforcing the bearish trend. Volume-based indicators are confirming the severity of the decline. The on-balance volume, OBV, has dropped sharply to 814.3 million, mirroring the price collapse. The Chaikin oscillator is deeply negative at -523.51 million, indicating heavy distribution and selling pressure. The volume-weighted average price, VWAP, at 0.6974 is far above the current price, showing that most recent buyers are now underwater. Let's talk about where the stock might find support or face resistance. Key support levels are at 0.175, 10 cents, and 5 cents, with each level representing a potential floor. On the upside, resistance is found at 28 cents, 43 cents, and 75 cents. Fibonacci retracement levels at $1.38 and $2.13 could also act as resistance if the stock attempts a rebound. These levels are crucial for traders looking to manage risk in such a volatile environment. Statistical analysis shows a negative linear regression slope of -0.0076, with a very low R-squared value of 0.0123. This means the downtrend is weakly consistent over time. The beta of 0.0582 suggests YYAI's price movements are not closely tied to the broader market, making it a unique risk. The 20-day correlation at 0.5607 indicates moderate internal consistency, but overall the stock's behavior is unpredictable. Looking ahead, the technical outlook suggests YYAI could continue to slide toward the 10 cents to 15 cents range in the short term. However, given the extremely oversold conditions, a brief rebound to the 25 cents to 30 cents range is possible. The ATR projects a possible higher low between $0.78 for the next session, highlighting the ongoing volatility and uncertainty. Given the catastrophic collapse and ongoing volatility, investors need to exercise extreme caution. YYAI is in a strong downtrend, with panic selling and massive volume confirming the risk. Only the most risk-tolerant traders should consider any positions, and even then, strict risk management is essential. The stock's future remains highly uncertain, and the potential for further losses is significant. YYAI story serves as a powerful reminder of the risks involved in highly volatile stocks. Sudden collapses can wipe out value in a matter of days, and technical signals can shift rapidly. For investors, it's crucial to monitor risk, use stop-loss orders, and avoid overexposure to any single position. Understanding technical indicators and market sentiment can help navigate turbulent times like these. Throughout this analysis, we've referenced several key technical tools: moving averages, MACD, RSI, Bollinger Bands, and volume-based indicators. Each tool offers a unique perspective on price action and market sentiment. By combining these indicators, traders can build a more complete picture of a stock's health and potential direction, especially in high-risk situations like YYAI. Summary: YYAI's recent collapse is a textbook example of extreme bearish momentum fueled by panic selling and technical breakdowns. The stock remains in a high-risk zone and caution is paramount. For those watching or trading YYAI, staying informed and disciplined is the best defense against further losses. As always, risk management should be the top priority in such volatile markets.